Welcome back to Explain the Charts. Today we're diving into AUDUSD, the Australian dollar against the US dollar, and looking at what the news and the charts are telling us. Let's start by looking at the daily chart, zooming out to see the bigger picture. Right now, AUDUSD is trading around 0.67, just below the 50-day moving average, which is acting as resistance. Looking back at the past few months, we can see a clear upward trend, with the price breaking above several key resistance levels. However, the recent price action suggests that the bulls are facing some challenges. The price has been consolidating near the 50-day moving average for the past couple of weeks, and the latest daily candle closed with a small red body. This could signal a potential reversal or a pullback before the bulls regain momentum. Now, let's see if the 1-hour chart reveals any clues about the current market sentiment. The 1-hour chart shows a more volatile picture than the daily chart, with the price fluctuating within a narrower range. Over the past few days, we've seen a series of small candles, indicating indecision among traders. However, the recent candle closed with a green body, suggesting that the bulls may be starting to regain some control. Looking at the 15-minute chart, we can see even more volatility. The price has been moving back and forth between support and resistance levels, with multiple small candles. This is classic chop, suggesting that the market is waiting for a catalyst to break out in either direction. It's a high-risk environment for short-term traders, but there are opportunities to be had if you can identify the right entry points. To understand the potential catalysts, let's go back to the news. The recent Google search results show a lot of talk about the Federal Reserve's potential rate cuts. This could have a significant impact on the AUDUSD pair, as it could weaken the US dollar and boost the Australian dollar. However, it's important to remember that the Federal Reserve is still navigating a complex economic landscape, and there's no guarantee that they will cut rates in the near future. The market is also grappling with China's economic slowdown, which is putting pressure on commodity prices. Australia is a major commodity exporter, so a slowdown in China's economy could weigh on the Australian dollar. It's a delicate balance between these factors, and the market is struggling to find its footing. Let's zoom in on the daily chart and focus on the past few weeks. We can see that the price has been consolidating near the 50-day moving average. This range could act as a springboard for a breakout in either direction. If the price breaks above the 50-day moving average, it would signal a continuation of the bullish trend and could push AUDUSD towards 0.68 or even higher. However, if the price breaks below the support level, it could signal a bearish reversal and could push AUDUSD towards 0.66 or lower. Now, let's switch back to the 1-hour chart and look at the recent price action. The price has been trading above the 20-period moving average, which is acting as support. This suggests that the bulls are still in control of the market, but the recent pullback has shown that the bears are lurking. If the price breaks below the 20-period moving average, it would signal a bearish reversal and could push AUDUSD towards the next support level. However, if the price can hold above the 20-period moving average and break above the recent resistance level, it would signal a bullish breakout and could push AUDUSD towards 0.6750 or higher. Finally, let's look at the 15-minute chart. This is where we can see the market's immediate reaction to news events. The price has been consolidating within a narrow range for the past few hours. This could suggest that the market is waiting for a catalyst to break out in either direction. A strong economic data release from Australia or a hawkish statement from the Federal Reserve could trigger a bullish breakout. On the other hand, a weak economic data release from China or a dovish statement from the Federal Reserve could trigger a bearish reversal. It's important to monitor the news closely and look for any potential catalysts that could impact the market. In conclusion, AUDUSD is in a precarious position, balancing the potential for a bullish breakout with the risk of a bearish reversal. The 50-day moving average on the daily chart is acting as resistance, while the 20-period moving average on the 1-hour chart is acting as support. The 15-minute chart shows a high level of volatility, suggesting that the market is waiting for a catalyst to break out in either direction. The news is full of uncertainty, with the Federal Reserve's rate decisions and China's economic slowdown creating a complex backdrop for AUDUSD. It's a high-risk environment for short-term traders, but there are opportunities to be had if you can identify the right entry points. Keep a close eye on the news, monitor the key price levels, and be prepared to adjust your trading strategy as needed. Happy trading!